So, okay, I think I'm on. A minute. Okay, then let me close this out. Okay, I think I'm good. Let's go to home page. Okay, so hopefully everybody's doing good today. Okay. Alright. I think no one's here today, which is fine. It's early in the morning, 9 o'clock right now. Yeah, just chilling a little bit. While you guys are coming in, let's see. Okay. So let's talk about the bond market a little bit. Now, it's not on the topic, obviously. I should have wrote that down too. But, hey, it's life. How's everybody? Hopefully you guys are doing great. Yeah, I'm gonna chill a little bit today, so I have 2 hours to be on here. Hold on, let me see if anybody want to join in here. Okay. Alright, so let's kill some time and talk about the bond market real quick. Now, it's been kind of talked about how the Fed funds rate's gonna be staying at this price point or at this level. The target, obviously, it's still at 5.5 right here. They want it to be higher for longer. So if they're raising another 25 basis point, perhaps it's going to give them, the stock market's not going to be. But again, I don't know how these people come out to, come to this conclusion. Of course, like the stock market just keep going up and up. Makes no sense, right? When everybody are struggling, including Dollar Tree store. I'll go to that story in a minute here. I'm sure you've heard of it already. There's stores being closed and all that stuff, and of course like layoffs as well. But for some reason the job market just keep staying the same. So I don't know how that would work either, how that would play out in that sense. Now what I'm interested in talking about here is the 2 years, right, versus the 10 years. Traditionally, this is what the definition of inversion yield curve, right? That the lower amount of bond, lower duration, pays more than the higher duration. And so this is what it means by inverted. So normally if you want to lock in your money for 30 years, I don't know, thank you for joining. 30 years, you would want, the interest to be a lot higher than a 3 months, right? And so this is what the conundrums that we have in the U.S. Treasury right now. So it just go to show you that they need the cash, whether it's a, Treasury bond, just or Treasury of Secretary of Treasury, Janet Yellen. She just want to issue more treasury, more debt, and all that stuff. So they're massively in need for cash right now, as far as the government goes. And so this is what creates this high demand of people like, hey, if you want my money for 3 months, you better pay me 5%, right? So this is what you're seeing right now. Now, of course, this is not sustainable, right? You eventually, either the U.S. going to have to lower its spending, you know, like you cannot create this type of demand in the government sector without going to the private sector to do so, right? Yes, all tide lift all boats type of scenario. But if they are picking and choosing which industry to put that money into, that's why you probably see the run of chip making industry. So they just keep giving money away to like whether it's government contract or whatever to this big corporation, and then they just stash that money away anyway in the treasury bond. So they're not really hurting by the fact that other people are hurting as much. So who's going to be paying for this? It's taxpayer money usually, right? And this is the problem, right? The problem is that it's not that we don't have enough for everyone. It's just that everyone up top get more of the wealth that is being created by the treasury bond. But the rest of us, the 99% of us, are poorer because of this debt that we have to pay for in terms of taxes, right? And this is why investing is so important to understand, is that what most people don't realize is that the amount of work that you're putting into it, yes, work hard is yes, in tandem with that, but it's not everything. Working hard is just half of the story, right? But you have to learn how to invest as well if you want to keep up with the inflation, because if you don't, you're going to stay behind. You know why? Because they tax you more for working than the people who have the money to put in an investment somewhere. I don't care what you buy into, whether it's bonds, stocks, or into a company that you love. None of that matters. It's just the pile of money that you would have gotten from buying into a security, housing, or whatever, right? When you go out and sell it, you get taxed less than the amount of money. Let's say you make $40,000 working, going to work, get up every single day, every single year, $40,000 worth of wages, earning income, versus $40,000 in just buying and selling long term, right? Let's say you make it from GME, right? You've been holding GME for a year, more than a year. It has to be a year. That's why if not, it's counted as a regular income. So that's why I qualify it that way. And then that taxes is less. $40,000, anything under $40,000 as a profit, you get zero taxed versus the money that you've gotten from working. You see, that's the discrepancy that they need to kind of massage the tax code. If they don't do that, then this is what you're going to have more and more. This is why, the rich get richer, because again, they don't need that money. Let's say, you have $1 million to spare on GME or whatever, right? And that $1 million turn into $10 million, right? You don't need that $10 million quite yet, right? You could just let that $10 million to grow even further, right? And so with that, you probably could just get that $10 million, right? To the bank. It's like, hey, I have $10 million worth of GME shares right now. Let's say it's 10 years from now. You're like, oh, can I borrow $100,000 just, or asset liability type of thing. So this is what they do. So when you get that $100,000 from the bank, you don't actually have to pay tax on that. So this is what rich people have been doing, is that not only that they don't have to pay tax on the gains that they have on stock, whatever, right, asset that they have, they get to borrow against it without paying tax, and then they could just spend it on whatever, right? Buy more real estate if they wanted to, right? So they have the opportunity to do that because they have built up so much saving already. for regular people like you and I, for me, well, let me speak for me, because like I'm not a billionaire. You could do that in a small scale, right? But it might take you a little bit. But to me, $100,000 is a lot, right? For most of you, you probably don't think that way. But if you even make $10,000 from this, that's enormous already too. So most people don't realize that. And if you could do $100,000, you could do $200,000, right? But not to forget that the first time you hit that $100,000, it's not quite feel the same way when you hit another $100,000 mark, right? And I've done that before, and it felt good the first time, and I felt like I was on top of the world, right? But then I have to bring myself down, smack myself down. Based on my choices of investment. But hey, this is the life lesson that I've learned. This is how I learn well. It's just by doing it, and not kind of like read the book about it. And again, that's a lot more risky than doing it other way, where you read other people's mistake and then you try to avoid not making that mistake. But to me, I just like to go out and do that by myself, and I feel like I learn a lot more doing it that way. So I've lost some, I win some, but the wins that I've gotten is the knowledge that I have moving forward, right? And so, but anyway, I'm just ranting. Hi Michael, thank you for joining. Rich get richer for sure. Yes, of course. But again, that's not to say that we couldn't achieve that for ourselves. It's just the knowledge that we need to be more aware of how you're being taxed. And I used to hate doing that, because again, I think I'm gonna out myself here. Hold on one second. Politically I aligned with Democrats more, but again, like right now I'm independent, because I opened my eye to these two parties, they're just there to pat their own pocket. They're not really there to create some sort of change. They don't want to change anything about the status quo, right? And they're there to perpetuate the same BS, right? And to divide us so that we don't agree on anything, and just arguing about just some bullshit that doesn't really matter, right? In the long term, it's like the whole gender thing and all that stuff. It's just, again, like, of course, like I'm all about equality and all that stuff, but then you have to qualify that to people just by saying, hey, certain things shouldn't be this way, and just disagreeing on the vaccine and all that stuff just makes you feel like, oh shit, I don't even want to say that, because then you get attacked by both sides, right? And in my opinion is that these political parties are there to just give you the impression that you have any choices at all. And so that's why I resonate with George Carlin, what is it? Comedy sketch, or whatever. And so the reason why I went off of that tangent is that all it is just being aware of that, right? And if you could be aware of whether these people are there to help you or not, just look at their action, right? And typically it's tax code that you need to care about. And if you want to kind of like at least protect your own asset, all you have to do is just learn how you're being taxed at one point in time, right? At every stage of your life, and avoid not doing the things that they want you to do, which is going in debt, right? If you don't have debt, I think you're ahead of everybody already in this economy, right? And so this is why Gamestop is so valuable, because again, leadership has been doing that 3 years ago when we decided to go debt free. And so that's the first step to success already. And people don't realize that how much of that decision to go debt free is going to benefit the company for the long run, right? And then they come here and say, Brian Cohen doesn't do shit. It's like all he does is cut. Okay, well, cutting is doing something, right? But anyway, so let me digress a little bit. I don't know why I went off that tangent, but thank you, Michael, for coming in. Excuse me. And so, okay, so let me make this point real quick before I forget. So, the 2 years. So traditionally, when you have the 2 years, has a lower rate than the 10 years. That's when usually, the beginning of recession or stock market crash is happening. But currently, you have the 2 years higher than the 10 years. Now, I watched George Gammon a lot, and I like his line of thinking, about the bond markets and all that stuff. Now, it doesn't come from me, of course. Like, he's not giving you financial advice either. I'm not saying that, but he was saying that the 2 years usually what the Fed is following. If the two years is up, the Fed is tend to kind of keep the rate along the same as the 10 years. So projecting wise, the Fed might lower the rate at this point in time, or this coming March or June, right? And if they lower it, and usually it's just going to be like 4.75, right? So that's 3 basis point. Just a projection here or a speculation here. And of course, they could still leave it at this rate for a long time. Well, they could flip-flop too, of course, right? They always do. They just want you to have the impression that they're, controlling the bond market, but actually they're not. They're not in control at all. The control comes from the market price, right? What people are willing to pay for the debt that they, accruing from the treasury bond, so to speak. So currently, of course, nobody is willing to give up their money less than this price right here for 30 years anyway. Anyway, so that's the bond market shenanigans. Let's see. Let's talk about this token. Obviously, this is, has been a pain to talk about, because again, like, if you're not in this play, you don't know what's happening, like how much manipulation there is about, the whole GME thing, right? And we all know about this Sol coin, and Solana has been, skyrocketing, and it's prepping up for something, right? And we all know why, right? If you're in GME, you've been forewarned already. But here's what they're trying to get people to have that sentiment, right? The price went down Friday, and so this is what they want you to believe, and this is why the price went down. Now I'll show you why as well, in the option change market, the reason why it's down. But here's the sentiment that they want to create. I have been hearing a lot of people leaving GME frustrated about price action, seeing newly launched coin going billions in less than a week. See, they want you to sell the actual value of, the stock, and to go all in on these coins, because in weeks you're gonna make billions of dollars, right? That's what they want you to believe, or people to believe. People who coming in newly to GameStop, or wanting to invest in GameStop, in the stock, they would much rather you buying a shitless coin, right? Or shitless coin, sorry. A shit coin, so to speak. And that's the sentiment that they want people to think about the company itself as well. And when people lose money on this coin, what do? They're going to be like, GME is a piece of crap. That's what the sentiment is. I'm not saying that for myself, but I just want to give people a heads up here. That's why it's so challenging. But again, to me, that's a good thing, in my opinion, for the stock, right? Because I could accumulate even more share of the company. So long as the people are still dumb enough to fall for this type of thing, GameStop is going to still be at, at this low price. For me, I'm kind of selfish that way. For me to accumulate more. Let's see. And of course, like, we've heard about this guy before. Now this is the FTX former FTX CEO. Apparently he's from Citadel. If you look at his LinkedIn, I'm not gonna show you that, but I'm sure you're aware of that already. But yeah, I mean, the whole FTX thing, because it was partnered up with GME partnered up with them, it gives GME, I'm sure Ryan Cohen didn't know it was a company that is that in, I guess he was naive in that sense too, that how do I want to put this? I really think he didn't know that the level of corruption that happens in the whole market, right? There's no reason for people to believe that FTX was a scam until it blown up already, right? And the news media didn't do, or the journalists out there who claim to be a journalist in the financial world, they don't cover all this stuff. It wasn't until it's already known by Twitter people who are like investigating, do the investigation. And it wasn't the SEC either that was the one that bring it down, right? It was Twitter people who have the ability to look into the chain analysis and all that stuff and say, hey, the company doesn't have any money, right? Or doesn't have any Bitcoin. You're just giving your money away. And so that's why FTX fell. A lot of people don't know that. Sorry, I know, let me. George Carlin, the comedian. Yeah, I know Miranda doesn't like Bitcoin. No, it's just not his will of confident, I guess. He's more like a retail person, which is fine. I mean, technology is different than retail. Bitcoin is a whole new topic to even talk about, honestly. Blockchains and all that stuff. The reason why I am into it is because that's how I got into the stock market, right? Knowing what to buy, the concept of owning a piece of something. That's how I got my start, right? So I'm sure if I started into the equity market versus Bitcoin, I would have had the same sentiment as, people who like Moran's. But we have different experience, we have different, knowledge on things. Not saying that he doesn't have any knowledge on Bitcoin. I'm sure he could just read it online and then know what it's about. I respect that though. Like if people don't know what it is, and then it's just a different opinion. So I don't think he doesn't like it. It just he just doesn't invest in it, like, which is fine. More share for us. Yes, I know. I think that's why, like, I'm so bullish on this one too, because it's an added value. Like, the story hasn't ended yet, and people try to convince you it ended already, and this type of thing. Again, like, where is the SEC? Where? It's like, isn't this like a manipulation of markets and stuff like that? Like, and again, the reason why they're not going after these people is because, again, this is probably the people that are betting against GME, and also the people that rub shoulders with the regulator out there. How else would they be so emboldened to make a coin that is GME, like GME coin? That's what it's called, GME coin, to manipulate people into thinking it's the same thing, right? And again, what if you don't know about the story of GameStop, right? And you really think that this is a token that represent GameStop's stock? Like, ridiculous. And I'm sure I have people out here who promoting that coin probably come in here in a minute or so, because I'm talking about it, and they're like, oh, everybody knows it's not the stock. It's like, no, not everybody. So it's not a good assessment to do that. And if that's the case, why not use different ticker? It's ridiculous. Let's see too. GME to $1. You see that? It's like liquidity only $1 million. Yeah, I haven't even followed this coin that well. But again, yeah, it's gonna run. Like, I'm sure you're gonna make money on it. But again, who provide you that supply? What is the supply? What is the demand? What is the whole token? Can they just mint endlessly of GME token? And what are you trying to achieve? That's another thing. Like, are you trying to squeeze the shorts? There's nobody shorting this token here. You see what I mean? And so it's anyway, I'm ranting. I'm sorry, you guys. Alright, so let me get off of that. So my thought is that they're gonna keep it at $14 or so. Really depends on the option chain there. And what I've noticed here too is that if you look at the option chain, it used to be like weekly, but now they do a monthly. I don't know why that is the case. Perhaps I have a all date, maybe. Okay. That's weird. Option chain, max pay. Hold on, I think never mind. But anyway, so if you look at this one right here, and this explains why the price is the way that it is because of the option chain right here. So March 15, which is last week on Friday, the volume and all that stuff, and they, market makers do these things in order to, gobble up these premiums out there. Remember, people are betting on the direction of GameStop right there. So this, I think this is call, right? Call, meaning that people are betting that GameStop can go up to $25 last week, right? And when it doesn't go to that price, the money that you bought the call option for expire worthless, no matter how much you pay for it, how long ago you bought it for. You're not going to get anything out of that. The same way for the people who bet that GameStop's going to $3, right, a share, they're not going to get any compensation for that. So this is why it's called max pain, because it's delivering the maximum amount of pain to retail investor, right? And so who gets all of this premium? Whoever sells the call option, and usually, or put option, usually it's market maker, right? Retail could sell it too. I could technically sell those call or sell those puts or whatever, right? I've done so on my option portfolio. I have 2 call options, and I sell a cash secure put, so I have enough money now that I could sell a $14 cash secure put right now. So I'm collecting 140 million. Imagine that. $140 for that one call option. So the premium is pretty high for March, at the end of March. Anyway, so here's the reason why it stays at 14. So if you look at this right here, see this is $15 call option. If it went to $15 and stay there, 8,300 contract would have been in the money, right? And so either the market maker would have to buy the share of GME to cover that, into the next quarter or the next week, or keep it at below 15 and above 14. Even still, even at 14, 5,000 contract is in the money. Now, it depends on who bought this contract and whether they have the money to exercise at $14 or not. If they exercise this call contract right here, the market maker would have to go out and buy shares of GME in order to deliver on the promise, right? Remember, call option is the right to buy if you buy the call option at this price. So if you have this option and it's in the money, you still have to have enough to exercise in order to get that share. If you don't, then your call option is still not, you would still have to pay that premium, whatever, right there, or get the shares. But to get the share, you need the money. So most people might not even have the money to, or might not realize that they need the money to buy those 100 shares still. And that's why they still lose, even though they're right on the call. I hope that makes sense. Now it stay above here, because if it goes down to 14, more contract would have been in the money for this one right here, but not by much, obviously. 13 right there is 7,000 contract. So there are people betting that it's going to come down in price right there. So that's for last Friday. But if you look at April 19 right there, this again could change at moment's notice. Like this amount of betting that it is going on, it will continue to add more, like as time goes on. I'm sure, there are people who play weekly option, there are people who play monthly option, so depends on who's coming in. And so currently, if it goes up to $15, 5,000 contract would be in the money. And then if you go up to $20 right there, that's probably a hard resistance right there. I bet you anything they're going to try to keep it down to 20. But again, if there's a surge of people either buying a shares or whatever, it's going to change. Gamma RAM or whatever. I'm sorry, my voice is going down. Gamma RAM and all that stuff is going to come into play. Now, the opposite could happen in the other direction as well, right? It seems like there's more contract being placed at the downside, right? So 18,000 contract, 15,000 contract, 10,000 contract. So if it comes down to 13, it might cascade down to 10. Now, this is good for investor, like people like you and I who buy shares, not contract though. If you buy contract, obviously you could lose everything that you put in, right? But it's only, that small amount. Depends on how much contract you buy or how many of them. You could really lose a lot. But if you buy shares, though, at $10, you could hold it forever, technically, right? As long as the company is doing well, why not? So, again, this could also be institution as well. Institutions, they're trying to capture GameStop at this price. And this is why there's a concerted effort, right, to drive the price down to that point, right? Because they have time to wait to get to that point. So just be on the lookout for that, again, always prepare for the worst, hope for the best type thing. This is April. And then in June, it seems like the max pain goes up in price. So $17. Could change at moment's notice, but that's what it is currently right now. So, hey, you could expect it to go up in June. $17. Like nobody's betting against the company here in June. So by June, I'm sure we're gonna post another quarter. So yeah, looks promising come June. So you have until June to accumulate more shares, in my opinion. Let's see what else. So in April, it's still going to be around 14, 15, 13, 12, and all that stuff. If they're successful at bringing it down to 10 or even 12 right here, they're gonna be able to scoop it at $12. I'm sure that's gonna be the support right there. Can it go down even further? Of course, anything could happen. Yeah. So what do you think? Jamie will open more stores. Eventually, not right now though. Not right now. But anyway, so let's move on to in terms of like stores. I have no doubt that eventually we're gonna expand, but right now there's no reason to, right? Because again, like if you look at the economy at large right here, let's move on to the Dollar Tree's story here. Hold on, which one did I want to? I think it's this one. Yes. So Dollar Tree, if you haven't heard already, they've been announcing that they're gonna close down 1,000 stores. Now Dollar Trees, of course, this is indicative of what's happening in the overall economy, right? Dollar Trees is a very like low cost store to own. Like, of course I've been to a Dollar Tree before. I'm hoping some of you are, unless you're rich beyond belief, I don't know. But items like $1 here and there, it's just, again, it's a showcase of what's happening in the overall economy. Is that not even Dollar Tree stores survive this economy, meaning people are not spending, right? Either they don't have the money to, or they just like wiped out at some point, right? Retail wise. But yet the stock market just keep going up and up in terms of price of the company. If you look at the let me see, market cap. Is it a market cap somewhere? $27 billion market cap, right? And I was looking at this company. Of course, I haven't taken a look at this company until the news broke. So let's look at it together here. Of course, it just reported a surprise loss, right? And what I've noticed too, I think it's in my thumbnail, Yahoo Finance, came out with an article of, the reason that they are going down is because shoplifter. Okay, so now you're blaming on theft, and all that stuff too. It's like, here's why. It's like, no, it's the economy, in my opinion anyway. But imagine if GameStop come out and say, we're closing 1,000 stores this quarter. Yahoo Finance gonna have like a field day. This just shows how they're struggling and all that stuff, right? So let's take a look at Dollar Tree balance sheets real quick. I laugh because I'm like, what the F, right? Okay, so right off the bat, yeah, great enterprise, right? They have more enterprise than value than the market cap. Typically, that's a good thing, right? Let's look further here. Okay, so share outstanding kind of lower than GameStop right now, the float itself. But look at this, boom. Inside ownership is this. But look at the institution, like they own more of these stores, and this is why they have the apology tour. They're like, hey, we lose money, we lose stores front, but it's because of the shoplifters, right? Don't think that this company is going under. It's just the shoplifters that are the problem. Okay, if you run a business that can't even survive a shoplifter, then that's a problem, no? I mean, come on. Either put more people in the store in order to prevent people from shoplifting, right? I know that costs more money, like in terms of hiring people. But yeah, so that means the company is in trouble, in my opinion, right? But again, this could be like a short squeeze of a lifetime, because 5% of it, how can you own more than 100% of the company? But again, institutions owns this. That's why, again, the media comes out here and say stuff like this, like when they presented a very bad balance sheets here, right? In my opinion, right? Let's look at it. Higher enterprise value is a bad thing? Oh, okay. Could you explain a little bit more on that one? I just said that because, again, like that means you have more asset now on the balance sheets. But let me take a look at it again. Like I haven't looked at this in depth in myself, but I just like look at the stat real quick here. So, but yeah, if you could explain to me why, that would be amazing. Thank you so much. Okay. So it looks like they did a 2-to-1 stock split in 2012. Of course, the analysts out there want you to buy. Okay, all right. Let's keep that in mind. Look at that. Okay, so gross profit is $9 billion. They make $30 billion a year. But look at the net profit. Why are they down by freaking $1 billion? They down by $1 billion this past trailing 12. And analysts out there want you to buy into that? Right. Net cash position down like negative $9 billion. Total debt $10 billion. Right? I bet you anything. Oh, look at this. They can't even pay. They don't make enough to pay the interest coverage. You know? Okay, so it says enterprise value is market cap plus debt. Oh, it includes debt. Okay. Good that's why enterprise value is okay, 3 point. Okay. Minus plus debt. So it includes debt in it. Got it. Thank you, sir. Thank you for clarifying it. Okay, so and then you have equity versus book value. That's good. At least they have like working capital that is positive. Like typically that's good, right? Working capital is the amount of money available to a business to conduct its day-to-day operation. Okay, that's good. If it's positive, that's good. Not knocking that at all. Okay, so at least they have positive cash flow. That's a good point to have there. But again, like CapEx, look at this, like much more than this. But at least again, the operating cash flow is large enough to cover, or to large enough that the free cash flow is positive. I hope that makes sense, because like if you minus this to this, these two, no, you minus it's like you minus capital expenditure to this, you get positive cash flow. So you always want the operating cash flow to be higher than the capex out there. Okay, I'm learning. Thank you. Okay. Okay, so gross profit higher than GameStop. I'm sure GameStop's gonna be able to get to this point right now. Okay, let me see. Let's compare orange to orange. No, I'm kidding. Different market here, but just comparing the gross profit, right? So 24. Imagine when we get up to 30% again, we would have ample, right, amount of profit margin out there. But this is Dollar Tree. Even with this high gross profit, they still come out negative. So perhaps because the debt is weighing them down, too much stuff. Per employee, they lose $4,000. Okay. Maybe it explains why they don't staff enough people in there to prevent the shoplifter out there. Okay. Alright, so let's look at the trailing 12 here. 9 operating 8. Okay, so they went from positive to negative. What is going on? What are they doing? Did they buy something? Acquisition? Okay, so they went from $1.1 billion in profit now down to $1 billion in profit. So it might be a one-off thing. I don't know, right? Maybe goodwill. Okay, so at least they have close to $700 million right there. Okay, inventory down by 300 million. They do have a lot of inventory. Okay, so goodwill went down. That's probably something right there. Down by $1 billion. So if you were to subtract goodwill from shareholder equity. Now again, goodwill, I just don't like to see goodwill on a balance sheet because again, it's an intangible asset. I'm not saying that, you won't be able to sell those assets for this amount. It's just that it's intangible. So if it's intangible, this amount could fluctuate. You see, like there's no reason why, there's no way for me to know why the fluctuation from, it used to be 7, now it's 6.8, right? So that's $1 billion different right there. And so that's why, I like to just discount it, right? Meaning just subtract it all together from the shareholder equity to get to $1 billion, right? So if you were to do that, you get less than $1 billion in shareholder equity. So that's how, since GME is a gold standard for me, right? That it doesn't have any goodwill value and all that stuff to prop the balance sheets up. I'm gonna do that for any other company that I evaluate. So I apologize, of course, like it's coming from my bias in GameStop here. So just keep that in mind. Retaining earnings, oh my goodness, what? So 0. Okay, so they went from earning, wait, is this a typo? I feel like this is a typo. Huh? That is so weird, you guys. Hold on. Okay. This is Q1, right? Okay, so they just posted Q1. And they are wiping $8 billion? How is that possible, you guys? Okay, so long-term debt. Okay, so they seems to pay off some long-term debt. Long-term debt doesn't need to be paid in more than a year. Other long-term liabilities. So I think this is like equipment and all that stuff. But then they move it to this. So that's why it's kind of like not. So they just want move from one place to another. Okay, they're not paying it off. How do you get a return? Is a net income previously earned that has not been paid out to shareholder as dividends. Oh. If retaining is negative, it can be listed as accumulated deficit. So where did they take this? I'm not understanding this very well, you guys. But anyway, currently it's 0. Maybe they take that to acquire something. Yeah, $8 billion is pretty substantial to kind of move places without. Yeah, I need to understand this more. But, hey, so far, if I were to look at the stat here, Dollar Tree is not a good buy, in my opinion, right? Not only that they have like, oh, look at the Omens, not even registered in the Omen Z score. They're, yeah. And not to mention too, like if you look at the private equity angle, like are they private equity owned? Who knows, right? But of course the analysts out there want you to buy into it. Yeah, the price target like 180. Okay, that's the high. Right now it's like around here somewhere. It's at the low. So on average they want you to believe that it's like $150 a share. Okay. So if a company that used to make $1 billion in net profit, now it's down to negative. Like, what the hell? You know, what's going on here? So this is the interest expenses. Seems like it's coming down though. Operating expenses. So it seems like they're like increased by $3 billion right here. So either they're acquiring something and then look, selling administrative up by $3 billion. Okay, there you go. Expansion, perhaps, I don't know. So should buy. Wait, GameStop should buy Jack. Their cash flow is crazy for the company size. I don't know what that is. Is that a company somewhere? Hi, not sir. Thank you for joining. What is Jag? Cannabis? I don't even know. It would be funny though. I mean, I'm sure, Ryan Cohen's probably thinking about that. Who knows? No, I think they don't need to do anything quite yet. I think, honestly, I feel like Ryan Cohen is kind of waiting for the Fed, decision. And I think it's such a good move to wait. Like, you don't need to rush to buy anything, right? When you have the money, you could just sit tight. Like Warren Buffett, famously, right now, he has like large amount of cash position waiting for the opportunity to present itself. If you have $1 billion, all you have to do is just park it somewhere where it's not going to erode in buying power, which is Treasury bond is the best place right now at the moment. Yes, you're not going to make, 15% in a year or 20% in a year, but even if you make 5%, 3%, 8% or whatever, it's still a better than losing 40% downturn or whatever, or 20%, right? And so waiting is a virtue too. Or waiting for opportunity is doing something. It's a smart thing to do. And so I think, again, like everyone right now is just waiting for the Fed decision to be made, and then they could, expand when it makes sense. Right now, it doesn't make sense to. It makes sense to pay off debt, which is why we did it, right? Or why he did it. And also, too, it makes sense to have cash on hand, which is why we have an amazing cash position built up, waiting for the opportunity of a lifetime. Right now, there's no opportunity. Everything is expensive, right? Any company right now, it's overvalued. Everyone in the S&P 500, everyone, except GameStop, obviously, because GameStop is left to die, right? It's like people thought it's dead. The people up top out there, they don't believe in the company. They don't believe in the movement. They don't believe in, how retail could ever be that smart about picking the right one, right? And so, when you rub shoulder together, even though you don't have that sentiment and you don't know anything about GameStop, you will still have that sentiment because you rub shoulder together with the big guys out there, right? You just, again, by proxy, you just believe what the big guys are believing because you rub shoulder together with them. You have the idea that, why would they lie to me about that, right? And then, you're less likely to look into the company itself for your own eyes to see. And this is why, you have medias out there, even though they know, I bet you anything, the big guys know. They're just waiting for Ryan Cohen to prove them, right? Maybe 2 more quarters, maybe 3, 4 more quarters. Then that's when they're going to be like poo-pooing it for a little bit in order for them to scoop up the price at a, lower price. They don't want to overpay for anything. This is what institution is like. And so they have time to wait, number one. Number two, they have the money to make massive amount of growth, right? And also, two, they have institutions out there, over-counter, right? Over-counter a deal making, big institution, banks to bank. And so this is why you don't see the price movement that needs to be in GameStop yet, right? Because again, the big guys hasn't made the move yet. And when they do, just like what Bitcoin is doing right now, why do you see massive amount of move freaking hundreds of billions of dollars in one day, right? Like, because again, the big institutions are in it. And much the same way with Nvidia, right? The big guys out there are making money hand over fist. You know, the Nvidia just faded in price. If you look at that, let me see. Right here, you know, is this the beginning of a rollover? Is this it? I don't know. Again, I can't predict the amount of like money that is pouring into this company. And again, this company only make what is the last time they make? $22 billion in one quarter. Okay, so that doesn't justify the price that it is today. $2 billion company, a $2 trillion company. Why? How? Right? Again, it's just indicative of what's happening in the company, indicative of what's happening in the broader market out there. There's too much money slushing around, okay? And they need to pump something up so that, you know, retail would be buying at this overinflated price in order for them, you know, the executive, you know, you've heard of Mark Zuckerberg selling. Even the executive in this company, if you look at the insider ownership of this company, it's 0, right? Let's look at it. Oh, okay, at least they have some better than AMC. But my point is that, look, institution own most of this company already. So it makes sense why they pump it up, right? And why, again, like AI, right? That's the term that you need to know. Oh, AI is going to bring this much. AI is going to bring this much. But think about it. How many people, how many companies are out there who are actually making money on AI right now? No, none, right? The only company that makes money right now is Nvidia, right? And they want you to believe, oh, these companies are selling a shovel to the gold mine, right? So, okay, if they're selling the shovel, then the people that buy their technology don't really going to make money that much, right? There might be one or two going to be rich. Just like the gold rush, you know, the only people that get rich was the company that's sell the shovel. The miners, they're just doing it for the thrill of it, or, you know, or they think they're gonna make big bucks, but they're not. Again, the same way, the company that is going to be pumping right in front of you, you know, I already see the news already. It's like, you know, next AI unicorn is gonna be this, and this. And again, it's always to pump it up so you would buy into it at this overvaluation. I'm not knocking on AI at all. I'm sure it has its place, but it's much like blockchain. Back when they were talking about blockchain, oh, blockchain is going to change this, going to do this and all that stuff 10 years ago, right? They want you to buy at a higher valuation. And then, you know, buy it at the wrong time. Right? And this is why famously retail usually lose money, right? While the institutions out there, they have the fortitude, foresight, and the data that say, hey, this is what you do if you want to get rich, right? Just, you know, mislead people into doing stupid things, rushing them to sell out of a certain thing, and then, you know, tell them, hey, you're going to make more money on this one, rather than just, you know, developing your own strategy and then just stay focused, right? Warren Buffett is famous at doing that. That's why he's, you know, a rich guy, slowly, right? And most people don't realize that Warren Buffett didn't get 99% of his wealth comes after he was 60 years old, right? It's not that he's good at picking the winner all the time, right? he's famously missing out on what is it? Technology company, right? He just recently bought into Apple. It's because of the consistent, and having the patience to wait for the 10-year, the deal of a lifetime that makes him, thousands of percentage more than the other people who are just buying and selling, day in and day out. You could get lucky at buying into something and then it 10x from there, but how many times can you replicate that? So that's the question. It's like, yeah, you could get lucky hitting the lottery once, but how many more times can you hit the lottery again? This is my opinion here. Hi Manuel, thank you. Are the positive earnings backed in on the price already? Oh, you mean like everyone knows Q4 is going to be great. Positive earnings. You mean like priced in the price action already? Is that what you're talking about? If you could rephrase that question for me, that would be great, Manuel. I don't know, like I think everything is priced in, technically, because again, like you have people like Ken Griffin's already, arbitrary put a price on a stock already. Because they want GameStop to be at 14 right now because of the market making scheme that they do, right? On the option chains and all that stuff. And this is why option, buyers usually lose most amount of money because they bet against the direction of the price momentarily. And so it will inflate at the price, but the company fundamental is going to catch up to that. That's remained to be seen. Obviously, I don't have the data in front of me, so I don't know. I can't speculate on the price because price is just psychological at this point. I always bring up Nvidia when people say, "Oh, GameStop is going to be this and this and this price." Nobody knows. Like, if you were here, right here, does anyone imagine that Nvidia is going to be 10x from here, right? I bet you anything they were happy just, 2x from here, right? Again, like you never know what things are until it gets there. My speculation is that this money, when people are taking profit off of this, right? I'm hoping nobody's buying into this. If you're watching this video, I'm hoping that you're not buying into this, because nobody wants to buy into an all-time high, right? When you buy into an all-time high, you're the sucker here, right? And so when they're taking profit, where do you think it's going to flow to? Treasury bonds, perhaps. Some of it's going to go to other company that is doing much better than it used to 3 years ago, right? And I think GameStop is going to benefit from that. But I don't know how long it's going to be until that happens. But again, people like Warren Buffett and they're waiting for an opportunity of a lifetime here. And will Warren Buffett ever buy into GameStop? I don't know. I mean, I like to think so. If Brian Cullen could prove to Warren Buffett, prove to the institutions out there, pension funds and people who are moving money around here, billions and trillions of dollars here, that the company is going to be profitable from here on out, year on year. Like it's not just quarter on quarter, like first quarter, second quarter, whatever. Whether we make $1 million or $10 million a quarter, it's still something, right? And so even just that alone, just that news alone, it's like, hey, actually, company's making money here. Like Palantir, for example, they were shitting on Palantir so hard what is it? Is that Palantir? Am I saying? Spelling this wrong. Palin. Oh my god. I can't even spell. Oh my goodness. I think I clicked on it a while back. Okay, let me see. Give me a minute. This is what happened when I don't eat breakfast. Here we go. Yeah, so when Palantir went down to this price point, nobody's like, in the news that, oh, it's terrible company, you shouldn't be owning this, right? The same BS. But now they're like, oh my god, they're the best company in the whole world, right? But meanwhile, of course, this is what GameStop has to prove, to the institution out there, that they're actually making money. Okay, so reported, this is revenue, this is earnings per share. So they've been positive earnings, but again, like, look at the amount of money being made right here. Not by much, right? But 2 cents right there. Reported 4, so they beat expectation. 1. 2, beat expectation 5 cents per share, right? Kind of flat, but I would consider this to be beaten, right? Beat expectation right there. That's 3. This is 4 times right there, right? 7 cents, right? But they're in the positive. And then this is the last one right there. 5 different times, sorry. So they creeping up, here and there. But again, they don't want you to buy into this when it was on its way up. And it's, again, like the expectation over here versus over here versus over here, right? But they only need to be a couple cents a share here in order for this price movement. Again, like this, see, this is 2 quarters of beating, and then boom, right? Prices keep going up and up. And so, yeah, GameStop just need to do that consistently. Currently, what are we? Like, if you were to... So we've been doing that consistently. It's just that the news doesn't want you to know yet, right? Or anyone to even talk about it. So again, so we had beat expectation here to the tune of 200%, okay? Remember, Palantir is only 42% or whatever, 40%. Beat, okay, 6%, not too bad. I mean, not too good. And there you go, 73. And then this is 100% beat. But again, Palantir has higher profit margin, and they have lower overhead costs and all that stuff. So it's a technology company here. It's not a fair comparison. The only reason why I mentioned this is because of the fact that we're beating expectation, right? How long? I don't know. Well, perhaps this is even though we beat expectation, we still have a net negative, in the trailing 12. I think that's why they haven't been scared shitless yet, right? I'm sure they're scared shitless right now. I don't know, but look at this, and this is why I always want to point out to you guys too. Like, People are saying, oh, people are selling off left and right and all that stuff. The evidence doesn't show me otherwise, right? Like here. On balance volume. Unless I don't know how to read this. I know of a stock that if you sell something, you see this on balance volume a lot steeper, right? But remember the article or the tweet or the X account, people were, it's like, oh, I'm sick. What did it say? Somebody, I've been hearing a lot of people leaving GME frustrated about price action, right? When they say that, it's not true when you look at this, right? So if people are selling left and right, then the volume would have been lower, right? But it's staying flat. So when people are buying it, they hold it, right? So why the price come down? Because they want it to come down. Market maker, option traders, right? There's no demand for option there in that sense, right? Not enough. I'm not saying there's none at all, but not enough to move the price. And again, option does move price. Like if you have more call option, in the money call option, if you exercise the call options, right? Those gonna move the price. So as far as like me predicting where the price gonna go, like I would never imagine, GameStop when I bought in at $40 that it would be at 12, right? But hey, I'm happy that I get to accumulate more at this price point, so that's fine. Hey, if you want me to own more of this company, all right, more power to me, right? So that's how I look at it. Let's see. And again, like traders gonna hate this company for a while until earnings. Then they're gonna come and flocking back at that. So even if you see this gap up right here, price gap up, you might not be able to understand why the price dropped immediately after that, right? And again, this is the function of market maker or the function of the market institution traders out there. They want to, kind of trick retailer to sell to them at a low price, because when people are panicking, it's like, oh, it's going lower, right? They would sell, but then the price take off, and then they're like, oh, let me buy over here. Again, it's like to cause you that emotional visceral reaction to be like, oh, if I could just buy it at a lower price, I would have had more, without being like, okay, well, dollar cost averaging down, less stressful, right? If you believe in the company long term, less stress, you go to work, make more money, put $20 a day, if that's what you want, or even $1 a day. It's like, $1 a day would get you in what? Shit. This is a year times 3. You would have $1,000, right, worth of GameStop right now. Well, it depends on where you buy into. It's like, let's say you buy it every single day. Doesn't matter where the price of GameStop is, right? You would have $1,000 worth of GameStop right now. So what is that? I need to go through, do all the math. Again, depends on what price point you bought into. But at least you have some shares there, right? Now, if you are lucky enough to do $10 a day, then it's 10 times that, right? So that's the power of and then you're not stressed out about the price action whatsoever. So all right, I think Manuel is either falling asleep or just leave the chat. But anyway, Okay. What was I looking at? Dollar Tree. Let's go back to Dollar Tree. So, if you read all of this, right? Like just the headline, right? You don't have to like read the whole article. Obviously, I need to like read most of the articles, but I bet you anything, without reading the article, you could say, you know, that they're kind of apologizing for the fact that Dollar Tree is losing $1 billion, but then they want you to buy it. The analysts out there want you to still buy into the company. You have this one, you know, of course, like slowly they've been kind of like shaving off their position, and I bet you anything they were ready to go short on Nvidia. Surprise. Let me see. Dollar Trees are closing. This city officially are happy about it. Okay. People are happy about it. It's more likely like $7 as value chain lift its price ceiling. So yeah, so they have to lift the price ceiling because of the inflations and all that stuff, or price. But again, like in Dollar General, of course, like I did a did a segment on that, or a live stream on that one. There was some guy who trying to promote it. Oh, don't buy GameStop, buy Dollar Tree, Dollar General. A couple months ago. Okay, this is Yahoo
The
Finance.
companies issued troubling guidance in their latest quarterly results. First, Dollar Tree on Wednesday announcing it will close nearly 1,000 Family Dollar stores over the next few years as it battles macroeconomic concerns and theft. Now, on the other hand, you have Dollar General on Thursday, which also warned of higher cost related to more costly labor and shrink. So what does all this mean for the playbook, and how do these companies turn things around? We want to bring in Kate McShane. She's Goldman Sachs' managing director covering the U.S. retail sector. Kate, it's great to have you here. So help us make sense of the trends that we're seeing at Dollar Tree and Dollar General, because I think many investors would think that these two names would be positioned to do extremely well at a time like this. So why are we seeing a bit of a disappointment when it comes to the forecast?
Well, I think we might have to start just what we've seen so far, which has been a more challenged top line and revenue growth for both retailers as they have experienced more pressure from the lower end consumer, which is their core customer. And so because of that, there has been pressure on the top line for them. The lower end consumer, while employed, has been dealing with high inflation and also reduced government benefits. And that has been one of the areas that both discount retailers have been dealing with, along with, on the cost side, quite a bit of shrink, which is basically loss of product from stealing and the like at the stores.
Stealing and the like. Oh, okay. Companies struggling because they're stealing from them. Okay. Now, I'm not saying like don't steal from people, but hey, it's like imagine if this stuff happens to GameStop. Do you think Yahoo Finance gonna be doing this press tour? It's like, oh, it's not the company itself, it's the economy. It's because they don't get the government benefits because of the shoppers. Like, it's nothing to do with the company. It's like, what? But of course, like it's all valid point. I'm just saying that it's again, like the way that they cover GameStop versus other company, it's not the same. But anyway, Manuel said that he was mowing a lawnmower. Okay, I appreciate that though. Thank you. But let's listen to this.
When you think about the average prices of just inventory at these stores, I mean, it feels like we're moving towards $3 tree, $4 tree, upwards of $7 tree. What, in terms of the consumer expectation and how the inventory is going to be moved through from Dollar Tree and Family Dollar's perspective, what is the real price that a consumer should expect when they're going to a dollar store in 2024 now?
Yes, it really does depend. I mean, starting with Dollar Tree, which until very recently sold most of what it had for $1. It broke that buck, which is a term we use. They broke through the dollar a couple of years ago now and are at $1.25 for a lot of its product. But as you mentioned, they're also adding multi-price points as well. And that's in order to cater more to what their customers need. So there are $3, $4, and $5 price points, especially in bigger items that they can offer their customer. And I think as a result of offering that, Dollar Tree is seeing a higher end demographic by coming to their store. $125,000 demographic is now shopping at Dollar Tree more so than they were before.
Okay, well, what does that tell us then just about promotional environment, promotional activity that we are going to likely see here in the coming quarters?
I think from a promotional environment, what most retailers are talking about is a normalized promotional environment. So what that means is when people talk about normalized, they talk about levels going back to what we saw before the pandemic. I think, during the pandemic and post the pandemic, there was quite a bit of pullback in promotions just because there was such high demand. I think now that we're in a more normalized environment, the level of promotions that we're going to see across retail will look similar to what we saw before the pandemic.
But anyway, so I was looking up the institutional ownership on both of this company that they're talking about, Dollar Tree and Dollar General. And they're, high up there, of course, like I showed you this one. This is Dollar Tree, more than 100%. And then this one is 90%, I think, is what I saw. Yeah, 93%. This is why they come out, even though the number is not doing great, right? It's like rolling over to the tune of losing, Dollar Tree. I'm not talking about Dollar General. Dollar Tree lost close to $1 billion this 12 months, right here, net income. So, but again, like I don't know the whole story of the company. What are they buying? What are they doing? To that, why is it like coming from $1 billion making money, right, versus $1 billion loss? So that's $2 billion difference right there. Why? What's changed from a year on year? And this is quarter to quarter too. Like, really? Yeah, so I need to take a look at that before I kind of trash on the company. But again, like cash flow positive though. That's promising. Still, even though their net income is not looking too good right now. So they might be buying something and all that stuff. That's why I was looking at like what's going on in the retaining earnings. Why is it so low? Like coming from 8 billion to 0 for Dollar Tree. But let me look at the Dollar General real quick. Okay, so if you look at Dollar General, okay, cash flow, that's pretty cool. At least it's like close to $500 million right there. I'm looking for retaining earnings though. See what they have here. Okay, so Dollar General, I mean, relatively better than Dollar Tree, but of course we know what Dollar General is. Like it's all private equity owned, so it doesn't matter how much money they have or they make. It seems like if the leadership is not there to, direct the ship well, I don't think the shareholders gonna get anything at the end, right? We all see what's happening in AMC and all that stuff, so they carve it out for their own friends and family, whoever, So it seemed to me, hold on, current debt right there, long-term debts right here, close to $16 billion in debt right there. And another thing about Dollar General too is that they have goodwill of $17 billion. Shareholder equity would be a lot lower, like in the negative, if that goodwill were to lower at some point, right? So typically that's why I don't want to be in this type of company. But again, the analysts out there want you to buy it. You see, it's on average right now, but it could go up to $270 from here, so almost double from what it is today. I don't know, with the economy that it is that is going on right now, I don't think that is a good idea. And this is why I think like everything is like overinflated, right? And Ryan Cohen, like GameStop is doing the best that it can right now, and in the best position ever too. It's like, just because they don't use that money to do anything, that is like the power play right there. It's just to have money. Hey, we have $1 billion. And people are like, well, what are they going to do with it? They don't need to do anything with it right now. I mean, if a Dollar Tree is struggling and it's overinflated at this current evaluation, then every other thing is also overinflated. Because the 99% out there do not have the money to spend. They're wiped out. So, I mean, one of two things has to happen. It's like either the wage would have to increase substantially from here, or the evaluation of the company out there has to be down substantially from here, right? There's no way around it. Companies needs people to spend money, right? If you want a company to be valuable, you need that. Consumer has to be strong. And so I think GameStop has been doing the right thing for 3 years already, and people don't realize it. Closing down stores, lower the footprints, cutting down hours, right? And people are like, all he's doing is cut. Well, he's doing the right thing by cutting. Right? What's happening right now? Look, these stores has been stampeding to cut because they had to. GameStop didn't have to at the time. They could have spent that billions of dollars to expand, just like everybody else, but they didn't. So that was the right thing to do 3 years ago. When Ryan Cohen got in as a chairman, and then thereafter, right? And so if leadership in GameStop could foresee that, what made you think they're not foreseeing growth in the company in three more years to go, right? Or 5 years, 10 years, 15 years, 30 years. So if they have the foresight to see what's happening today, then I have no doubt that he could see 3 years from now it's going to be, great. So Summer asked me if GameStop would ever grow. Of course we're going to grow. It's just not right now, at the moment. Makes no sense. So, and people ask me all the time, say, why would you buy into GameStop? I try to tell people at work and all that stuff too, that hey, GameStop is high conviction for me, and I think good leadership is the only thing that you should be care about. But also too, it's not just leadership, it's just everything going for it as well, the industry itself, right? the balance sheets, everything's adding up that GameStop is doing well. So if you look at the Yahoo Finance news feed over here, 5 days ago, of course, they're trying to launch Reddit, right, as a IPO right there. And of course, we all know Reddit has been infiltrated ever since, GameStop run. Private equity, I don't know, but again, they seems to pump everything else but GameStop, right? Oh, this stock has high short interest, you should get into that and all that stuff. And I fall praise to that. But now, hey, I'm so glad that I'm more focused on GameStop right now than any other, other quote unquote meme stock out there that they want you to believe so hard that it's like to the point where, they're creating a token that is mimicking that. It's like, again, what are you trying to achieve by buying that? You're not getting the share of GameStop. Now, if you buy the token and you could convert it to shares at some point, then that is the value proposition right there. But if you couldn't, then I'm sorry, you're not doing any favor to the company itself. So just so you know, you see this like 10 days ago, 3 meme stock battleground to keep you on your radar. Right, so at least they mentioned GameStop there, right? I wonder what. Oh, so now they see. Okay, it's not GameStop. Okay. How do I? Okay, so they want you to buy into International Seaway. Okay. And Novavax. Pfizer. See, like they tell you that these are meme stock when they're not meme stocks. And again, like Yahoo Finance is notorious at trying to, like make GameStop to be this company that is not worth your time, effort, and looking into, even like the analysts out there. That 12 years analyst guy, Brian Suzy guy, seems to know what he's talking about, right? Oh, GameStop is shit. Brian Cohen have fundamentally failed. At what? What did he do? He make the balance sheets better. He's operating better at a lower cost, but higher profit margin. What more can you ask? Like, but then you call them a failure? Why? Like, makes no sense to me. But for some reason, it makes sense to people who don't know what GameStop is. So, it's so weird to me that people are just believing, these type of new media at face value and not looking into it yourself. I think that's the danger of our, state of. It's not just stock in general. It of course, like bleeds into other stuff too. Even the politics and the migrants and all that stuff. Like any news that is presenting to you, as if like it happens all in a vacuum here. It's not, and this is what they do best: is to divide people, to confuse people. To call people name, like even the meme stock itself, like that name has a negative connotation to it. Anytime you hear about meme stock, it's just, it's a ridiculous company that people are getting into, even though they're presenting themselves, I'm talking about just GameStop here. Even though GameStop, has been doing very well, as I've been shown, small little incremental change here. I'm not saying it's massive amount, but again, like if you're cleaning up messes that happens, like oil spill, for example, like it takes some time to clean those up, right? And so, just 3 years of doing this, and leadership has been doing it successfully already, even at the face of people telling you otherwise, right? I don't understand why people don't understand that core core principle of like, hey, when people mess this large of a company up, old leadership, right? That means that it's going to take some time. It's going to take some time in order to clean up the mess. And so, just like the mess in your house, like, can you snap your finger and then it's done? No. Like, you need to make sure that the stuff goes where it belongs, right? And it takes time to reassess and all that stuff. And I think, we all know that companies doing well, but the media out there, they don't want you to know that. So, and of course too, like I think Moran's already mentioned this one too, that there was a concerted effort to confuse people on when the company is reporting earnings, right? I think somebody came out and said, GameStop could be reporting at the 18th or where was it? It's like a day before it was announced, but currently right here, hold on, let me see. It's announced 26. So this is the official announcement. So just so you know, I know I made a live show on that one last time already. So yeah, let's see how long I've been here. Ooh, close to 2 hours. Wow. Okay, so let me see. Tuesday we have maybe 9 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days. Well, technically 9. Today is like half day already. How about 9.5 days since earnings? So it's going to be a very, very famous one. Of course, just like Nvidia, right? Nvidia, when there's earnings around, sorry about the dog. When there's earnings, it seems like people are watching this. So this is going to be the one to pay attention to. Not sure how it's going to go. Of course, I'm expecting good things. Now, the first one is going to be a more kind of like nail-biting, right? More nail-biting than the fourth one. Of course, fourth one, we know that we're going to do well. But the first one of next year is going to be, or this fiscal year, it's going to be the test of time, or the testament of the company, whether it's going to be going up and up from here. Based on my speculation, obviously, I trust leadership to do the best they can. That's another thing I was gonna talk about as well. Let's get to this since I have the urge to talk today for some reason. Okay, so if you look at I'm sure it's been talked about before, but look at the revenue, right? So 5.7 versus what we were able to do. Let me see. Versus 8. This is before Corona. Okay, so 8.8. I wonder what is the percentage decrease there. You know what? I'm gonna do a separate video on that because I need to kind of make sure. Never mind. I want to figure out like the percentage of this versus this when we were back in our quote unquote glorious day. And if we could achieve $8 billion sales again, how much will we be able to kind of scale it out to that point? And how much more money, since we're not, we don't have any interest payment, like we used to, we're gonna even make more money on that as well. So, see all of this stuff because of debt, right? And if you look at the history of this company, we've been paying debt or paying money because of debt. So the highest that we've been paying is around 50 million, 56, 57. I'm looking at this right here. Okay, so $57 million in interest payment, the highest we ever paid, right here. So back in 2017. So this is why it's so smart to not own any debt, or to have any debt, because this eats up into your net income right there. So you should have been able to make $400 million plus the interest, right, that you would have received based on the marketable security or whatnot. But instead, you have to pay it to whoever senior notes holder, and beholden to them. And on top of that, you have to place somebody on the board of director from them, right? And so that's the anchor, that people don't realize that debt would have is, that, it's a shackle, that invisible shackle that people don't realize, that we've freed ourselves from it already, right, as a company. And not only free ourselves, we could become our own bankers, right? See, instead of paying people debt or interest expense, you collecting debt, you collecting rent from people, right? So that's the massive opportunity that people don't realize that GameStop has. Moving forward, even just having that billions of dollars, you think the bank's not going to be able to be like, say, hey, can I borrow that $1 billion that you have? It's like, okay, how much you want to pay for it? 10%. Give me 10%. Give me 8%. Give me 9%. And on top of that too, they could over leverage that as well at some point, right? So banks love to lend businesses more money when you have money, assets, money, cash, or whatever, right? So instead of getting this door slam in front of you, like let's say GameStop saw an opportunity of a lifetime. It's like, hey, I need $10 billion right now, right? How would the bank give you $10 billion if you don't have any, balance sheets to speak of, right? And so, again, I'm not saying that, but I'm saying the possibility is endless in the sense that they could borrow money from the bank more than any other companies out there that are drowning in debt, right? So that's the opportunity of a lifetime that people don't realize in 10 years from now, right? But I'm sure, Brian Cohen is like is not going to leverage himself to that point or leverage the company to that point. It's just the possibility of getting that loan afforded to you when you need it. And, yeah. So, not only that, if let's say GameStop want to expand, right? Not only that the bank's gonna be falling, or at least competing for GameStop business, to be like, hey, loan my money at a lower rate And I'm imagining like JP Morgan fighting for doing business with GameStop eventually, right? It's like, hey, take my money, take my $1 billion, give me 0.2%. You don't even have to pay interest. Like just take this money, because it seems like you know how to make more money for me. So in the long run, obviously, the bank's going to be able to make more money with GameStop, with Ryan Cohen. But again, like, and I think people are just short-term minded at the moment with this negative sentiment. But eventually they're gonna flip the script. If you think that they're not going to flip the script, just look at Bitcoin, like, and they will do it. They will do it just to steer people away from how great this company could be. All right, I guess like there's no opposition. I feel like I'm just preaching to the choir here. Everybody's so quiet. I know like most people are watching afterwards, and I appreciate all of you being here, writing comments, and and I appreciate mostly Summer here for enlightening me on the enterprise value. So it seems like because the enterprise value, including debts, that's usually and minus cash too. Okay, so we have a lower enterprise value than the market cap. That's good, right? Okay. If that's the case, I thought it's the opposite, but again, I need to look into it more. Let's see. Okay. I guess I'll end it here. Alright guys, thank you. I'll see you when I see you.